GetCrack. Wake up, motherfucker.
All right, what's up? Man, you guys should be on vacation. Shouldn't you guys? What the heck you guys care about stock market shit? Rocket Lab up, ASTS up, right? All right. So, yesterday was all the little huts, APLD, all that little stuff. Today was all the space stocks. Everybody's getting hyped up for SpaceX IPO next month. All right. I mean, we're just gonna go up, aren't we? We're just gonna keep going up, are we? But yeah, I mean, we'll see what happens over the weekend. 3-day weekend. Futures market will be open on Sunday night, so that will still be open. Korean markets are open as well. So even though we have Memorial Day, futures and overnight Asian markets will be open. So anything that's funny could happen then, right? And that'll be interesting as well. Bitcoin, Ethereum, I saw all the cryptos crash right into the close of and like I told you guys, crypto is basically a stock right now because once they made those ETFs, that was the worst thing to happen to crypto. Crypto was fun before they made everything into an ETF. All the boomers bought all the ETFs, and now crypto moves are highly correlated during the daytime US market because you have to remember China got out of crypto. Okay, China made their money on crypto, then they rug pulled everyone out of China. Whoever was holding crypto in China had to go to Kazakhstan or somewhere else, and that's why there's no action over the weekend, overnight. It's US dominated now. When Asians had crypto, man, it was way more fun. You had more pumps, you had more gambling. Those days are over. As you can see, before the market closed on a 3-day weekend, all the cryptos went down. It's like, why should you care? You have a 24/7 market. Why does it act like it has a closing time? Well, because all the volume is driven by the ETFs now. Everyone who has 401ks can buy crypto indirectly through a ETF. So there you go. And I'm sure that really dominates how the cryptos move. Okay. Is tonight the night, boys, or the most elaborate taco yet? Dude, I don't know. I don't know. Who the heck knows? Who the heck knows? Yep. Yep. Semi's still strong. I don't know what to say. And let me pull up a chart. But we're gonna talk about tokens today. Let's try to slow it down a little bit. Try to go over some concepts, and then maybe later on, maybe sometime during the weekend, I'll get some time open, and we need to discuss about the Fed. All right, we have a new Fed chair. I think a lot of you guys don't really understand how the Fed works. Maybe I'll have to do some kindergarten style explanation of the Fed, the Treasury Department, how the money printer works. I don't know. I'm not really a good guy to talk about those things either. There's way smarter people out there, but I can at least give you the overview, right? A lot of the people on YouTube kind of go maybe too in depth on it, and we only need to know as much as we should to understand how the markets work. Liquidity is all that matters, and yeah, I see Eric here talking about like the interest rate. The interest rate. See, the thing is, it's not just interest rates. All right. The Fed also controls a balance sheet. This is because of QE, which got started in 2007, 2008. They did quantitative easing. So they started buying bonds, not only mortgage backed securities, but actual treasuries that's out in the market. And currently, a lot of foreign countries have been dumping their treasuries, okay? And that's why the yields have been going up. The other thing, however, is that the Fed is also keeping the balance sheet stable now. They stopped doing QT. QT is quantitative tightening, the reverse of quantitative easing. So I guess most people kind of understand how interest rates work. Interest rates go up. Uh, stock market goes down, right? That's the most simplistic way that you look at. And I played the little video yesterday showing that if the 2-year yield is much higher, all right, than the Fed funds rate, usually what that means traditionally is that the Fed will have to catch up with the bond market. The bond market is telling the Fed that, yo, you got to raise interest rates. But the Fed could totally ignore that. That's true. And Bruce Fraser said that is actually a bullish signal. The longer they ignore the bond market, that actually means the stock market can ignore the bond market as well. Okay, that's one way to look at it. Another way is that you look at the QE QT scenario, where if you look at the balance sheet, if the new Fed chair does not tighten anymore, they said like we're cool with the balance sheet the way it is, or he just keeps on extending QE. They don't call it QE right now. They called it another euphemism. Like the Fed always likes to use euphemisms, but it's basically QE. And I read those articles for you from McClellan. McClellan said like, yeah, he thinks it's QE. Other people disagree. They think like, oh, no, 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 no. They're not buying bonds back again, blah, blah, blah. Other people are saying like, no, this is just another way of buying back bonds. So they're stabilizing the bond market. They're injecting liquidity. And as long as liquidity is still there, there's no crash coming. The only reason you have a crash is something like you saw in 2018 going into 2019. You had a lot of turbulence because the junk bond market, the corporate junk bond market, start panicking and selling off. So these are the things that I probably should start teaching you guys again, because I already went over these concepts like 2 years ago. But it's probably more important that you know it now, because we're going to be in a weird time. We have a Fed chair that is unknown. We know what Powell was going to do, but this is a new guy. And whatever he says, how he talks, could really screw up the markets, either up or down. I don't know, right? I have no idea. That's called Fed talk. So yeah, money printer goes burr. I mean, it was easy with Powell. We knew what he was gonna do. Everything what he said he was gonna do, he did. He was probably the easiest Fed chair to trade around. And Trump also was very easy to trade around, right? Every time Trump like says something, crashes the market, it gets pumped back up even higher, because Trump cares about the stock market more than anything. He always talks about, oh, where's the Dow Jones at, blah, blah, blah. So even though you have huge crashes like last year, did you really think Trump was going to allow that to like go all the way back down and revert and take away all the gains of the COVID? No, come on. And there were so many bears last year, right? In April. And then how many bears are coming out now about Iran, talk about Iran. Bro, Iran is just being is used as a way to trick people to try to short the market, like Michael Burry, Martin Shkreli. Look at them. They're trying to short the semiconductors. And look at what semiconductors did today. It gapped up. It gapped up over resistance. They better hope that Trump starts a war in Iran again for another 60 days, because if there's no bad news over this weekend, holy crap. The only other thing would be like Dell reports bad earnings. Dell, um, man, like what, Marvell? I mean, those two have to have some seriously bad earnings, I guess. And even if they did, I don't even know if that could possibly crash anything. Nvidia was so boring. That was the first time I saw Nvidia earnings the last several quarters already that did nothing to the market. Nothing. Yep. So that's how it games. The problem though here is that like there's a zig and a zag, right? Like we had these zigs and zags. These zigs and zags. If you buy at the top, it's like, bro, you could have waited and bought on another dip. That's what Eric is wondering. Eric is wondering, man, okay, I didn't buy on Tuesday. Let's say, right? Could I wait and see if there's a crash on this coming Tuesday and I could get in? Well, I don't know. I don't know the zig and the zag. So a lot of the insider guys are making a lot of money on the zig and the zag, right? They're making like, they know beforehand, oh, Trump's going to say something, or they know a news like outlet is going to say something, right? Axios. Everyone's looking at Axios. Oh, these Axios guys, every time 4 a.m. Eastern, They somehow know that Trump's going to do something. They report it a couple hours before the market opens. Pre-market goes crazy, futures goes crazy. You see? And then they make a huge amount of money shorting or longing oil. So there's a lot of this noise that their people are making. I can't help you with that. Noise is always going to be in the markets. And noise is just something I try to not guess. Okay? I just look at the trend. The trend is up. The trend is up. So I can't help you with noise. I can't trade the noise. The noise is simply going to have to be something that you either have insider info or a lot, or you pay for those subscriptions and get those options. So you're going to get all that options data and try to figure out, oh, this guy has all these calls and puts and this level and that level, and then guess what it's going to do. Yeah, I can't help you with that. I just try to teach you guys stuff that you can do for free. You don't need to like do advanced research on. Okay, it's easy, right? I showed you guys. You look at the range, and I say buy hut goes up, and I say wait for the range to complete, hut goes up again, and wait. That's easy. Nobody needs to teach you advanced finance, advanced CPA stuff. Like, you don't need to know accounting. You don't really need to know much about economics, or even options. All you need to know is there's options expiration on this Friday. There's going to be VIX futures expiration on this Tuesday. And I told you that beforehand. And you had these speed bumps, right? It's like, hey, you got a freeway, you go up, right? You go fast. And then all of a sudden you see like, oh, there's construction coming. And then I tell you the dates where it happens, and you have a little speed bump. You have to slow down. They're doing like fucking resurfacing, repavement or something. And then it's like, brr, brr, brr. And like, that's it. That's it. And yeah, I'm glad you mentioned that one. I forgot to put that on my list. So we had like CRDO, and we also had NVTS. NVTS was great, right? So if you want to gamble, I'm not playing these stocks, mind you. So the buyer beware, caveat emptor. So if you want to go even harder on the semiconductor risk factor, forget about Intel, forget about Micron, forget about these guys, forget about ARM. Let's go. So yesterday I told you NVTS. NVTS today was 20%. All right, let's review the chart here. Look at the chart again. We had a top up here. This was a SPAC back in 2021. We had a pop going into November. That was just before the bear market of 2022. Crash, go back up, crash. And now back here, back in May of 2025, pump, sideways. Well, this was a failed pump right here in October. I don't know what happened here. Must have been some stupid news that pumped it and it crashed right back. It's kind of like the Hanta virus, right? It's like Moderna. It's like, oh, go up. Ooh, maybe it's time to go up. Nope, revert. So this is like Hanta virus for Moderna. Gotta wait. So we gotta wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 20 weeks. So half a year before we actually move up again. So, you look at Moderna, you see like you have a bottoming structure like this, and then Moderna does this. That's when I've said, like, forget about Moderna, guys. You can wait another like several months, half a year, whatever, before we try Moderna again. Get what I mean? Right? See, that's the problem. Like, when you get into a range like this, you don't know when the real pump will be, right? This was a false pump. This was a real pump. And then now we're actually above this level. So what do we do now? So if you're a gambler, you would say like, yeah, we broke out. Let's keep going, blah, blah, blah. It should pump all the way into June. And then we'll hit another top up here somewhere. And then we'll break down again. And then, or we make a range or whatever. And then we'll see what happens. So that's why everything is always about ranges and then pumps or like trends. And then, yeah, that's it. Oh man, it got rejected. Your order got rejected. Oh my God. Yeah. Damn, that sucks. That sucks. Oh man. Yeah. I mean, this stuff, but yeah, it's easy. It's easy to do this, right? You don't need to know anything about finance. That's why I teach you the chart stuff. And I'm trying to tell you guys is like the chart stuff, it doesn't mean like I believe in cloud patterns or something. The chart stuff is just a simplified way of doing this, and it's an easy way of you guys learning like how to trade without actually doing something that requires you to have advanced knowledge or buying a subscription. And I showed you the prices, right? Doing the options stuff, it requires you to pay like $500 a month. So those several videos with that nerd who was talking blah 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 blah, the VIX going this way and the SPY going that way, and then the puts and calls, and then all. It's like, why do I need to know all that shit? It's like, okay, that's cool and all, okay, but I'm paying $500 a month. How much more money do you think that extra bit of knowledge would get me in terms of actual profit, compared to me just looking at a stupid chart and going like, oh, I see a fat green candle. Wow. Oh, I see it going sideways. Okay. And this is free. This knowledge is free. I don't need to pay anybody. And I could see, oh, moving average, right? And I can get money this way and no problem. I don't think you're going to get much more like out of it. And the thing is, you have to put more effort too, right? That's the other thing. And also you have to trust them. The data that you get has to be trustworthy. A lot of that data is just like hokey, half-baked, not true. A lot of the big boys don't, trade in the open markets either. They do it in the side. They call it the dark pool, the dark markets. So the stuff you see here, the data, even the data here is suspect, like the volume, right? I see volume, but a lot of the bigger boys, they do trades behind the scenes that you don't see in your chart. Okay, this is out in the open, out in the light. And then they have some places where they trade at the dark. That's private. So I could just go up in New York. I could make an agreement with Ray Dalio. Yo, Ray Dalio, you like to shill China. Why don't you give me those Alibaba stocks, huh? Like, give me like 1 million shares, okay? And then we trade in an alley somewhere, and that's it. You don't see that data in the chart. You're not going to see that volume data. So even the volume data here is not complete. And so do you think like the options data will be complete either? So you're paying a lot of money for options data, $500 a month, and you might not get anything from it. So that's why I'm telling you. I'm just telling you stuff that I've spent years looking at. I'm going like, that ain't worth it. That ain't worth it. And this is just the best way to do it because it's free. It's easy access. Everyone can do it. You don't need advanced knowledge. And that's why I'm teaching you this stuff, because you see, it works. It works. Even though you know in the back of your mind, I don't know everything the Fed does, Trump does, and whatever. And it just works. Oh, you don't know about dark markets? You don't know about dark markets? You see, you guys don't know. These are the things you don't know because you haven't done this experience stuff, right? I only learned these things because over time, I learned more and more bit by bit. Um, and I don't want to overwhelm you guys. I don't want to like throw everything I know in your face, because I think that just makes you get neurotic, and it's like pointless. Don't be neurotic. It's easy. Trump told you to buy Dell. Trump told you to buy Dell. Why didn't you just buy Dell? He told you what to buy. You can't call him out on insider trading when he told you what to do. What is Dell doing today? Up 16.77%. Yeah, see? I mean, bro, keep it easy, keep it simple. Don't overcomplicate your life and think everything is like a psyop or something. Everybody wants to think there's a psyop coming. It's like, dude, the psyop is like telegraphed ahead of time, and then you guys get like complain when the psyop happens, and then you complain when the psyop doesn't happen because you got caught up on another psyop within a psyop or something. That's what it is. Yeah, you went with Trump with the Texas Instruments. Yeah, I saw like a lot of stocks got popped up because of they started looking more carefully at what Trump owned, which is weird. I thought everybody knew Trump owned this or that stock, and now it's popular. Strange. Okay, SpaceX, Open AI. Let's see here. Anthropic debut will make. Yeah, it will. It will. All that stuff. So first up will be SpaceX. I think it's the Friday before Juneteenth. So that's the date that they have so far. I'm not sure if that's going to be the date. So look around the time when Kevin Warsh will speak. Right, Kevin Warsh will speak on the 17th. So around that week, or just before that week, or just after that week, yeah, SpaceX will go into the open, and we'll see how stupid the stock market's gonna do after that. And that's probably the top. That'll be the top before we go down into October. Okay, that'll be the temporary top, not the real top. The top that people think will be the top. It'll crash so hard that people think it's a bear market again. Then you go in, and then you buy all the dips again in September, and then we go back up right after midterms elections and into next year. That's what I guess what it will look like. But if that doesn't happen and we have a major crash going through November, it's gonna have to be something that'll break the stock market like really completely. And so we're gonna have to look at what the banks are doing probably in the future. Yeah. So okay, Marvell, yeah, good stuff. Okay, yeah. Okay, so let's look at CRDO. Let's see how that one's doing. CRDO. So we talked about these stocks um last night, and they all pumped. So NVTS pumped. Oh, I'm not playing those. Okay, I'm not playing those. So disclaimer, don't blame me if if you buy these insane stocks and they don't pump no more. I don't know how long they'll pump, but they pumped today. They pumped today at least. So there you go. Oh my god, let's see. Retail has limited lottery for IPO priced shares. Yeah. Well, they have ETFs. So Tropes said there was a DXYZ ETF that has maybe 14, 20, 25% SpaceX in the ETF. So there's indirect ways of getting ETFs. And I also said that the SEC is streamlining the rules. So a lot of the IPOs are prevented from being put into the S&P 500 right away. But if the SEC, if Trump gets the SEC to change the rules, you will see S&P 500 get Anthropic, SpaceX, OpenAI immediately within a few months, which is not allowed within the old rules. So we're going to have changes in rules because they want to pump it. And you see Korea right now. Korea now is opening up options markets for Koreans that now have weekly options for single stock, whatever. They didn't have this kind of luxury before. Now they're opening up everything. And then next month, we will have 24-hour currency trading between the US dollar and the Korean won. So anybody who wants to buy Korean stocks from the US can do it 24 hours now because they can easily load up their brokerage accounts in Korea. So you can go to Korea, or you can call somebody up in Korea and go like, yo, I want to open a brokerage account in Korea so I can buy all your shitty little memory stocks, technology stocks in Korea, and I'll pump them up for you. Go ahead. Right? Do you have $1 million? You can probably get citizenship right now in Korea. You got $1 million, open up citizenship, open a brokerage account, dump your money in there, buy up stocks, help out the Koreans, and make that bubble fly, baby. That's it. And if you do that, that money comes back to us. We pump our markets, they pump their markets, back and forth, ping pong time. And that's how bubbles start. Does Korea have their own version of a Fed? I assume so. I assume every country, every modern country anyway, every quote unquote modern, I mean like IMF dominated country. The IMF controls all the banks. Okay, we already had this agreement since Bretton Woods. So which countries don't have agreements with the IMF? Cuba, North Korea, the Vatican City, but everybody else has to follow the international law. International law being U.S. dollar dominated suck ma dick type of agreements, right? So you gotta suck our printer, okay? So enjoy the ink because that's how we dominate the whole world. All right, that is the new world order. Well, now we're entering the new world order. So we already had the new world order after World War II. Now we're gonna have the new world order. And you can go to New Hampshire, visit that hotel, Bretton Woods, and look it up. Bretton Woods Agreement. See, this is why I probably have to tell you how the actual system works, so then you understand what's going on at a higher level. But I don't think you need to know too much of the details of it. All you need to know is that like everything is easy peasy. We go in between everything. All right, so CRDO looks pretty good here. I'm liking this. Yeah, I like this so far. Looks a lot like all the other guys, right? HUT, APLD, all that stuff. Nokia went up, and today I'm going to play a video from this accountant. Okay, he has a CFA level 2, level 3 um, kind of expert level explanation. So gonna go to some nerdy stuff. So there's more fundamentals. You look at a Nokia, it's right up to the top blue line now, man. Oh boy, dude. If Nokia like fails to break here and starts going down or goes sideways, I'm telling you guys, you gotta buy Nokia. Nokia next year probably is gonna break out of this and go crazy. Crazy. I stayed there for my cybersecurity meetings. Uh, Oh, Bretton Woods? Oh, that's cool. How is it? How is that hotel? Man, I don't know anything. I need to go travel some more, man. It's like I traveled when I was in grad school, but it's like, oh, I did my traveling. I'm done. I should visit more of these historic areas. These places are really historic. This is where everything was built. Fascinating. But yeah, okay. But you guys know HUT and all that. So APLD and NBIS, pulled back. They were very aggressive yesterday, right? They pulled back. HUT tried to get like maybe 2-3%, but also like, yeah, not enough. But yeah, Rocket Lab, ASTS, LUNR, Intuitive Machines. Those three went up really nicely, 8 to 10% on all of them. Very good charts. Will they continue next week? We'll see. We'll see. Or will we have to wait? We're gonna have to keep going sideways for a little bit. It might not be done, right? These guys all have kind of like that sideways ish looking thing. Like Rocket Lab is very clear cut. After we broke the resistance, we're just staying in this sideways motion pretty much. It's just very violent though when it goes up and down, right? It goes between 113 and 135. Very volatile stock. But once it breaks out, guess what? The next leg is probably going to be huge. Now, there's no problem with staying here longer. The longer we stay here, the more energy is being built up. So it could just keep dancing here for what, like 1 week, 2 weeks, and that'll be okay. That's fine because then it's it's gonna go up a lot higher. If it just goes up now, um, it'll probably like go really quickly, really like a bubble level type action, and then it'll just crash back down to here, right? Or even retest 99. You don't want that. You want kind of like a steady motion and go up because this is kind of like a stair step. So every time you actually break out of somewhere major, this red line is so important because it was the last one back in 2026. You kind of want it to take a break. You don't really want it to just to keep going up so insane because that means there's a lot of fear that will just pop. The bubble will just pop. So you kind of want to blow that bubble slowly, just get it up slowly up so that you don't want to like exceed the limits and tolerance of the of the whole thing. So we will discuss another example. So I have an example for you. Let me see, which stock did I use? Okay, semiconductors. I use semiconductors as an example. So maybe if I got time, I'll go over that. I have a lot of crap to cover since the market was boring today. So I decided, yeah, let's go over some concepts. I think you guys need to learn some concepts, and then maybe over the weekend I'll talk about the Fed, central banking, blah blah blah. Really boring stuff. It's boring. Yeah. Okay, a building built on an Indian mound is where they stayed. Oh man, don't get into that. I don't want the no. Surprise, the Rocket Lab pump again. I sold. Oh, why are you surprised? Why are you surprised, man? It wants to go up, but is it ready to go up? That's the question. So if you bought like here, right at the bottom of this range, you're probably gonna be waiting and biding your time. For anybody else that just bought like right here, right between January 2026 and May of 2026, between this whole area, these guys here are just comfortably at $68 to $99, and they're just waiting for the next move up. So they're comfortable. They're not in a rush to sell. So you're either here or you're maybe over here. But if you buy up here, like I said, if you buy at the top of the range, you're sticking your neck out. It might go up, but you're not 100% sure. So that's not a good place to go long usually. Some people they do wait for it to break out, but then they kind of wanted to test it, but I don't like that. I personally just want to look for a range and do it because if you listen to Joe Rabel will be like, well, I'd rather wait for this moving average to go up here than I wait for that. So you see why this is bad. Like if you use too many indicators, like Joe Rabel will use indicators, and he has to wait for the perfect conditions before he pulls the trigger. So here you have to wait for the moving average to get closer. And then over here, you have to wait for the trigger on a lower time scale. And then this thing, if I pop up this, I have to wait for exactly like everything to hit the right way for me to buy. So you kind of limit yourself when you buy, and you have to wait for all the conditions to line up for the highest probability to buy. However, that's not always going to happen all the time, and you're going to miss out on a lot of good trades just because you're waiting for this indicator to go closer to zero. You're waiting for this indicator, this blue line, to go below 20, and then you're waiting. Like too many things have to be correct before you do something. You know what I'm saying? Like it protects a lot of beginners um from doing mistakes, but I feel like if you're an advanced person, you shouldn't like do that anymore. You should just be able to tell like, oh, this is a range. That's why I like the Wyckoff guys better, because they don't use any indicators. They don't need an indicator to tell them that they should do something. They're willing to stick their necks out if it looks good in a certain way, right? Looking at this is very strong because you're staying above at the upper level. Would you, let's say you bought it today, you probably would buy it today because of the way this thing looks and behaves compared to like something like Hut. Hut spends most of its time at the bottom half of the range, right? This thing spends most of the time at the upper half. So this thing has a higher probability maybe than Hut of going up right away, immediately. Hut might take another 5 weeks, right? Who knows? 5 days to 5 weeks. This guy might just go up now, just based on the way. And there's no indicator that'll tell you that. It's just the way it looks, the physiognomy. That's why I like the physiognomy a lot better. That should be the way you should look at things, okay? Okay, that's just a side note. So you kind of understand why I bring in a lot of these things. I show you like, oh, Joe Rabel's way is looking at moving averages, looking at certain ADX conditions. Okay, if you look at Rocket Lab on the ADX down here, this is a great time. With his method, you would buy Rocket Labs back in February to April, just because, like, here, you can see this, like, okay, this and this, and let me get rid of the moving average here. Let me hide the indicators. Okay, you see this? Like it's compressing. It's compressing. The volatility is decreasing in Rocket Labs here. That's really good. That's something you really want to see. And I'm not using any indicators to see this. But if you use the indicators, let's say you don't see this. If you use the indicators, the Joe Rabel way is like you look at the blue line, it starts going down below 20, and it goes really low into the crash here, the little crash here during the Iran stuff. And this thing wasn't crashing really in the Iran situation only until the end. So the last weeks or the last week, looks like it's just the last 3 days, trading days of March, and then it bounced back up violently, right? So when you look at this blue line going down like this, you would say, wow, this is a great time to look and consider buying this stock. Because all that means is that like the volatility is decreasing here, and you could see it just without looking at an indicator. You see, if your eye is trained enough, you see this right away. You don't even need to have an indicator to tell you that. Indicators are great for beginners, but very bad for the advanced person. The advanced person should not need to use it. That's all I'm saying. Because if you're so reliant on an indicator, you have to wait for the perfect conditions to say this is a great stock to buy. You see? And it's not always going to do this for you. You're not going to have like such a perfect condition where the indicator, because this blue line didn't go down fast enough, really. If this blue line went straight down and went below to 5, then this would be an easy buy over here, right? But here you kind of had to wait. So you don't know exactly if this indicator is going to work for every stock all the time, right? So that's kind of my issue with indicators. It's not perfect. Indicators are just kind of like a signal that's created based on price, right? And your eye should be able to tell you what's going on, because price action doesn't always guarantee the indicator is going to do what it should be doing, because it's not perfect. There could be a lot of noise coming in and distorting this indicator's results. You could have like, oh shoot, there's a huge pump over here, and then it would just ruin this thing. Or there's a huge crash over here, and it will ruin everything. But it was just noise. So how do I get the signal away from the noise? Right? The indicator is kind of like a very poor way of extracting signal from noise, because it's not always going to be perfect. So, and especially when the big boys, they know what indicators you're going to use. Okay. This is why technical analysis is terrible in that sense, because everybody wrote books about technical indicators in the 80s. Everybody in the hedge funds, Goldman Sachs, JP Morgan, they know what indicators you're using. They know you're going to use RSI. They know you're going to use moving averages. They know you're going to use like MACD. Guess what? They can manipulate the price to make the indicators do something else. You will miss the time to buy because they manipulated the price to screw up the indicators, and then you missed out, right? Because they know what you're using. You don't know what they're using. They hide what they're doing. They completely understand what the JQ public is doing. They know you idiots like to use RSI, moving averages, MACD. That's why it doesn't work anymore. Because once somebody makes a book about it, everybody reads those books, everybody copies what they do. That's why I tell you, don't waste your time learning about technical analysis too deeply. You can understand it up to a certain level, but don't waste any more of your time. You can learn everything you need to learn in one day. You can go on YouTube, be like, what's RSI? What's freaking MACD? What's this and that? And it's like, okay, yeah. See, they know what you're doing. They know exactly what you're looking at. And they'll manipulate the price just to screw you up. Guaranteed. So this is the reason I don't like indicators. Yeah, so okay, I went too far with my rant over there, but I think it's important you guys hear it and you understand why I do things the way I teach the way I do. Like, I'm not teaching you like, whoa, there's a big candle here. Okay, is this a dark cloud cover? Is this a dark cloud cover? So you're gonna use like Ichimoku, ancient Chinese, Japanese way of looking at rice markets. Like, oh, this is an inside bar. Inside bar means it does this. This is a doji, and this is a gravestone. You see, like, if I tell you that stuff, that's trash, like utter trash, because everybody can see that. Everybody's gonna be looking for gravestone doji, like tombstone over here. Like, what is what the tombstone upside down triangles? Like, no, 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 no. If everybody's looking for those patterns, you bet your ass that all the big players are manipulating things to make it look like that. Okay, forget that, dude. VWAP. VWAP's an interesting one. Brian Shannon, you read that book, Kyle? He wrote the whole book about VWAP, and that's not like that's not wet ass pussy. Okay, 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 guys, get your heads out of the gutter. Get your heads out of the gutter. Holy shit. Anyhow. Okay, let me see. Holy shit. Okay, let me see what I'm gonna try to do next here. I'm going to Brian Shannon. Um he wrote a book about the VWAP. He's known as the expert on it. Brian Shannon. I think that's his name. So yeah, you can look it up. Should be on Amazon. VWAP, Brian Shannon. Yeah. Okay. Okay. Let me look at another stock and then we'll continue here. So this is the stock I am going to play a video about. We're going to have an accountant look at the fundamentals of this company. Okay. This company is an insane company in terms of its stock. It only goes up. It only goes up. $2 to $150, right? Something like that. It only goes up. So it's a really insane stock, up 8% today. You can see how crazy it looks in the monthly. Weekly, it looks more stable because it's a straight line that matches with the moving averages. Okay, so $2 to 150. So for 1 year. So this beats out SanDisk. Anybody else? Everybody wants to talk about SanDisk. Forget SanDisk. You want to have a risky semiconductor stock and you don't care about risk? AXTI. All right. Indium phosphate. So anybody who knows about semiconductors, you can look up Indium phosphate. And I'm going to play a video about this. I think this will be very educational for you to understand why a stock could move in this manner. Okay, this is a preview of AI. So imagine Claude, Anthropic IPO. Imagine the IPO is over here. Imagine that Claude pumps this sucker up all the way up to this level from $2 up there. So let's say Anthropic opens at $200 a share. I don't know what it's going to open at. And then all of a sudden it's a $2,000 stock, 3,400. So this is your future. This is your future, okay? If a hardware company can go up like this, imagine what a software company is going to look like. This is going to be the future. And, I'll be playing that. All right, let's look at semiconductors. Okay, SOXX. This thing here, we had one big range. All right. Here, okay. Let me start from the beginning. Back in 2024, remember this time? This was the great yen carry trade crash, and then since that time we went down, down, down. So let me erase this so that you can see. Okay, you can just look at these bars here. All right, go up, down, up, down, up, down. So July 2024, that's when semiconductors went nowhere. It went down and then it went sideways, and then we had the tariff stuff. The tariff stuff crashed it again. And then since then, we've been going up. All right, let me put my drawings back up. So we can look at this whole thing as a range between July of 2024 up to January of 2026. So let's say this is a range, right? We went below this range, and this is based on volume profile. So this is like VWAP, all right? So it's the same. VWAP is based on volume and price. So this is like a bell curve, right? Kind of, right? You have your little outliers over here, and then you have your sigma from this red line. So up, down will be your sigma. So your variance over here, standard deviation, whatever. And here's your mean, right? Okay, so that's where all the price is headed towards, this area here. And then so once we got into the little tariff stuff, we bounced off. You see, let's zoom in. We had a little range here. We had a little range here. We had a longer range here in the summer. Okay, so this was after April, the big drop. So May, June, and then July through August. And then after that, we went higher and higher, where we went to the top of this whole range. So the above the standard deviation, we were far away from the mean at this point. And then what you saw was that the range expanded. These were little tight ranges, right? The width of these ranges were very tight. And then now we just went big, 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 big. So the volatility increased. So either it would just crash and go back down here, which is what some people were hoping for, right? Some people were hoping like this would just crash right down to back to 227, that area. So SOXX. But we didn't do that. We didn't do that. So memory, thanks to Micron, the Koreans, we broke out right on New Year's. We were like, whoop. So New Year's week. Okay. So this was like January 2nd, okay, on a Friday, New Year's week, we popped up. So people who are selling here because of tax reasons, right? A lot of people will probably be like, oh, I got enough profit, I'll just sell some. And then the calendar flipped. So usually you see a lot of activity around New Year's because like people are selling because, oh, I got my profit. I look at my taxes. You estimate your tax and be like, well, my capital gains will be this. If I sell before like New Year's, I won't have much problems. I guess it won't be much different from me selling after New Year's. So they decide to sell early, right? Probably around here. So those guys got out. They thought there's enough profit because it's pretty big. You buy, if you bought the dip in April, May, and you got out here, that's good profit. So a lot of people would just sell, and they would just look at their taxes and be like, well, it won't be much difference if I sold it after New Year, so they sell early. So now we got this stuff. So after those guys sold, no more selling pressure anymore. Boom, we move up. Thank you, Korea. So Korea, all SanDisk and Micron pushed that sucker up again. We got up here until the end of January, okay, and then we got some earnings, and then people sold off again. They're like, well, all right, I'm glad I waited and did not sell before the New Year's because I had a lot of tax problems, and I don't want these huge capital gains tax just because like I bought in April. So there were some people that wanted to sell after New Year's, and those guys probably sold off after earnings right here, right? So those guys sold off. So you can make a little story. I don't know if that's true, but you can look at it like that. Like some people sell before the New Year's, some people sell after the New Year's, all right, because of tax reasons. So these weren't actual people that were panicking and getting out, right? I don't think these people actually knew that Trump was going to go to war in Iran, all right? So I think that's what was happening in these two times. Now, after we got a bottom, we create a new range. So now we go back to the top, and then we have NVIDIA earnings. So we had earnings right here because of Apple, because of Microsoft, Google, Amazon, right? But there was one big boy left because that's how it works. NVIDIA always reports its earnings 3 weeks after all the major tech earnings come out. So Apple, Amazon, Microsoft, Google, okay, they report earnings first. Then everybody's waiting for NVIDIA. NVIDIA happens here. Or was it here? I don't remember. It was either here or here. I guess it was here. Yeah, I'm pretty sure it was here. So NVIDIA reports earnings. Oh, not good enough to go higher. Crash. We go down. And it was pretty interesting that that week was the last week before we went into war with Iran. So do you think like they decided to go to war with Iran after NVIDIA report earnings or before NVIDIA report earnings? You think it was deliberate? Trump cares a lot about the stock market. He doesn't, do things without asking, yo, should I start a war with Iran before NVIDIA reports earnings or after NVIDIA reports earnings? Right? NVIDIA reported earnings. So if Trump wants to start a war again, maybe he'll do it this weekend. So, yeah, that could happen. He asked his advisors, yo, should I start a war before NVIDIA reports earnings or after report earnings? Right? There you go. There you go. So there you go. That's your conspiracy of the day. Hey, Crack, do you have a way to programmatically run your trade? No. No. Trading to me is just for fun. This is just entertainment. All my money is still like long-term stuff, like I don't do this. It just keeps me engaged because I'm retired now. I'm bored. Like what do I got to do? I don't have a family, so all I have to do is like do a little trading. Keeps me interested. And the other thing is like yeah, I got free time, right? Trading is only takes like half an hour to 1 hour in the morning. So 5 o'clock pre-market to 6 o'clock for me in Pacific time. By the time I'm done, I'm done. I'm done with the day. Maybe I'll come back before lunch. So lunch, my time is when you guys close in the Eastern Seaboard. So that's it, right? So the time works out. This is why I like living in California. It's great. I can wake up early. I get everything out of the way. I'm done. I have the rest of the day to do whatever I want. Yeah. So um, that's it. But I don't have anything programmed. So this is why I'm doing this now for you too, because if you see what I'm doing, you guys can program it. We got AI now, so everything I tell you can be put in a list, and then you could just tell Claude, "Yo, Claude, this guy looks at this, and then what we have to figure out is how to rank them. So how do we rank things? So moving average, what's your rank? How strongly do we need a moving average to do something? How strongly? And then we have to rank them, put it into Claude. Claude will generate some code for us, and then we can use that code to start running stuff in the back end. So I think this AI stuff is really doing things that I was thinking about doing it during COVID because I was bored, right? Everything was shut down. And there were these programmers making Bloomberg terminals like Shkreli is doing now. Shkreli has his own Bloomberg terminal knockoff. There was another university. Yeah, what's up, Ugg? Yeah, there was another university that was doing in Brazil that was doing their own Bloomberg terminal, OpenBB. So you can go to OpenBB. Their source code um, is out there. So it's open source, at least partially open source, not completely, but yeah, I guess if you're a programmer you can go mess around with that. But now with AI, I think all this stuff is kind of like going to be obsolete anyhow. AI can do a lot better than any of these guys could, and you don't need a computer science degree. You don't need to know much. All you need to know is how to edit code. At least you should know how to read code and debug code. So some knowledge, but you don't need to really create it from scratch anymore. Which is really helpful because I'm so lazy. I do not want to code. Come on, man. I did all this stuff just to get out of work. Why do I want to get back into work? Yeah. Trump won't do Iran after June, I think. It's now or never. Yeah, I don't know. He won't want to tank the big three. Yeah, that's a good point. He wants to do it before the big three. Or maybe they tell him like the big. Yeah, I don't know. I don't know what his advisors are saying. Who the heck is talking in his ear anyhow? You get up at 5:30. I naturally wake up at 4 because I was never a morning person. I was usually a night owl in school and at work. But when I retired, I started becoming more of a morning person because I decided like I'm getting older. It's not healthy to be a night owl. So I started forcing myself to wake up early, and it's better that way anyway. I could get a jog in the morning. I'd rather have a jog in the morning than in the heat in the summer, right? So in the afternoon. So I think that was another motive for me to do that. So I could get a jog in after I'm done trading, and that'll be it. So that's good. So I just forced myself to change my schedule. Yeah, I used to be a night guy. Just have to be a Jeet level coder. Yeah, that's right. You just have to be a Jeet level coder. Correct. No, yeah. Mm-hmm. Eric, yeah, I don't know. You could change your whole schedule by moving around. If you live in Hawaii, market hours are at night. So if you're a night owl, live in Hawaii. If you're in Hawaii, you can trade both the Chinese markets and the New York markets in between, right? Because you're halfway between two time zones, pretty much. Me too. Now I am 5 a.m. I don't force it anymore. I go to bed. Yeah. I'm an old man. Yeah, I'm an old man. Now I become boring and not fun anymore. No more partying, okay? No more doing blow. All right. No more Molly. Come on. That's over. I'm not going to Vegas and going to the stupid electric dance circus or whatever. Didn't they have electric dance circus last week? Vegas is begging people to go to Vegas, man. Come on. I think Grace programmed to knock off Kalshi market. Yeah, I saw that. Yeah, she probably did. She's trying to make a knockoff poly market. And I told people, I told John Frederick he needs to do a poly market for Boyd, because on one of the John Frederick gym streams, there was another dude with like all these racks of Bitcoin miners, and we were talking about like streaming. Do you guys know about Pump Fund? So there's something called Pump.fun or something. Pump.fun. And every streamer there gets their own little crypto. So their own little crypto. Okay? Yeah. And so I thought, like, if we have a Boyd network, we could get like everyone has their own coin. Yeah, Electric Daisy Carnival. Okay, yeah. My bad. I forgot what that acronym meant. Circadian rhythm is like 25 hours or something. Yep, that's right. Vegas is definitely not what it used to be. Yeah, exactly. It sucks now. Oh man, when the mob ran stuff, it's a lot better, right? You had the mob and the drug game too. It's like illegal drugs were better when the mob ran it. Now there's no morals, there's no ethics, you know. At least they have a code to follow. Nobody follows any kind of code. They let all their customers die from fent and all this shit. This is like crazy. You guys are insane, bro. You guys have no scruples about making a dime off of somebody's death. All right. Anyhow, all right, back to this. So we go up. Okay, we had this range. Okay, Nvidia. We had war. We went down all the way to the end of that quarter. We popped up. We went up. This was a false breakdown. False breakdowns make very strong pops. Okay, and notice how long this width was, or this length. I mean, the length. So you have to look at the length. Okay, measure the length and measure the width. Okay, measure the width. All right. So you want to measure the width and the length. This is going to be important for you guys. All right. That's what I'm going to use. Okay. Oh man, I'm using the stupid same tool. Oh, come on. Okay. Width. All right. I got to use the width and the length. Remember that. So what I'm going to do now is I'm going to teach you a little bit about point and figure. All right. And then after that, I'll get into the AXTI video. That's what I'm going to get into. But this length and width will determine how high things go when you break out. So we went back up and then we had a gap and we went higher. Okay. And we went to this stair step over here. And then now we're in a larger stair step over here. And now we broke out again. It looks like here we gapped up today. Okay. It looks like we're about to get off of this little range here. So that's what I wanted you guys to see. So you kind of look at the depth and the range of things, and then you can compute how high things will go using point and figure. And point and figure, I'm going to show you now. This is the boomer way of doing things. Actually, it's before boomers. It's a silent generation type activity. This is what Wyckoff was doing before charts. So they didn't draw charts like this. All right. So you look at charts now, you see this. It's computer generated nicely for you. But he didn't use that. Okay. He didn't use that. And I'll show you what those guys used to do. All right, let me look at a 78-minute. This thing will be important. Okay, you see this? Okay, let me get rid of all this noise here. So we were in a range, and then now we broke out. We gapped up, and we went above this blue line. Right? That's what we did today. Now, if you look here, you can see another range, right? And let me get rid of this. Get rid of this. Okay, let me see. Okay. Okay, so this is a range, right? You see this? And then if you look at this is like another range. It's kind of miniature version of what we did here, right? You kind of like, we went here, we were about to crash. This is what happened during Tuesday, during that VIX futures expiration. It's like, oh shoot, we're gonna crash and burn. And then all of a sudden it just reversed and went right back up, just like we did during the Iran stuff before he tacoed out of it. He went here, oh my God, we're gonna nuke them. Oh man. And then all of a sudden, pop, we went back up. And here we just popped and went back up. So this thing is kind of like a miniature version of this, but this one is not as long and not as wide, right? This one was wider and longer. So this thing created this move. If this thing is actually going to go up, it's not going to go up much. I would target this. This is because of DeMark. DeMark said we're going to go up to 596 or something like that. So SOXX, this is the next level. So only about 10 to 12% up here is probably what this is going to give us. It's not going to give us this huge move that we got down here. Okay, you get what I'm saying? Yeah. So the longer the size of the range, the higher the potential you can go. It doesn't guarantee that it will go up that high. It just gives you like an idea of the potential energy stored, right? You have potential energy and then you have kinetic energy. So potential energy being stored, kinetic energy. You can think of it like that. Brian Shannon's the boss. I bought his book back in the day. Oh, okay, cool. So you have somebody that recommends his book. Yeah, I haven't read it. So there you go. So that will be the intermediate level. Okay, so that's the intermediate level is 600, somewhere about there. Crazy Horse 2 is a famous Vegas spot during Vegas height, not to be out of nowhere. I'm trying to remember if I remember. That does sound familiar. Multi-stream Kick 2, I think. No, yeah, we have a multi-stream on Kick. Yeah. That just looks like a tourist trap. Yeah. My mom got into investing in self-directed IRAs and angel investors from working a strip club. Yeah, Crazy Horse sounds familiar, but I don't even know if it's what. Oh man, it sounds familiar. I wonder if there's definitely some. Is there a Crazy Horse strip club in San Francisco? I'm trying to remember, man. I don't know. I don't remember the strip club days. Okay. Anyhow. Okay, now you got that, right? Okay, I'm gonna close this. Get rid of this. Get rid of this. All right, we're done with looking at a chart. So I'm gonna try to explain to you this other chart. Hopefully you understand. I don't know if you will understand, but let me try. Let me try to explain to you this way of looking at things. Okay. Let's see if this works. Okay. You see this? And I'm in Paint because I'm very tech savvy, right? I'm in Paint. I'm showing you guys this in Paint. This is how we go. This is how we fly out here. I'm very tech savvy, and I'm very tech savvy. So this is what the old school guys used to do before computers. I call this the tic-tac-toe chart. That's what I like to call it. It's called point and figure charts, though. So this is SOXX. So the chart you saw before, I redrew it like this. And you can do this in stock charts for free. Okay, this is a free service, stock charts. Stock charts is probably the best one that does this type of thing. You can do it in Trading View too, but I think the stock charts one is more traditional. You know what I mean? This is the way how people did things for real. The Trading View or any other charting platform you use might not be the correct way of doing things. Okay, because there are rules. There are rules where you have an X and when you have an O. So tic-tac-toe. So here I draw it. Okay, and then can you understand what this is though? Like, what is the X-axis? What is this? What does this mean? Like, I don't even like what's a time scale here? There's no time scale. Okay, there's no time scale. This is not time. Don't look at this like time. So you think this is like February, March, April? You think each of these boxes mean that? Nope, wrong. Each of these boxes is not time. It has nothing. Time is not even here. There's no time here. So what this does is that it only looks at ranges and big moves up. Okay, so if you look at this huge string of X's, this is as if it was going up in one line. So if you see a trend, you'll get an X's like this. Okay. If you start having a pullback, you start getting zeros. All right. You pull down. That's it. That's all it does. There's no time here on the X-axis. The only way you see time is you see these letters and numbers. You have 1, 2, 3, 4. I don't know if you guys even like can see that stuff, really with all that. Let me see. Let me get my little pen here. Let me get my little pen. Let me see. Can I draw how big? Oh, that's too thin. All right. This is how advanced I am, huh? With all this. Here we go. All right. There we go. And I want a nice color. How about blue? All right, cool. Cyan or whatever. So you see this? You see 1, you see 2, you see 3, you see 4. So what do you think? What do you think that number means? So that's February. That's January. You see? So 2 is February, 1 is January. Okay, 3 is March. All right. And then once you get up to 9, 9 is September, then you have ABC. ABC is October, November, December. That's all it is. So here you have A, B, C. So let's say the stock market went up in a straight line, right? It went up really good, like a bubble. Then you would have a string of X's, and it will be like A, B, C, D, or not D. There's no D. Okay, A, B, C, 1, 2, 3, 4, 5, 6, 7. Okay, so it's just gonna go all in the one column. So there's no idea of time outside of that. There's no time here. So when Wyckoff and the people like Wyckoff before computers, they would draw stocks, the stock chart like this, because all they were interested in is there a range or is there a trend? And you can see that this is a range. It's very clear. It's very clear here. You're not looking at any noise. Any noise would be eliminated. This filters out the noise. This only looks for signal. So that's why they like to draw it this way, because they did not care about like the daily or the by the minute up and down, up and down. They looked at the chart like this because then they could focus on what really was happening. What really was happening was that a lot of people were buying semiconductors between 2024 here. Okay, August 2024, there's an 8 here. August, September, okay, right there. And then October, November, December, and then January of 2025, and February of 2025 into March. So they were buying all the way here. So even though there was a crash that went down, which was because of tariffs, that didn't matter. This was only temporary. There were a lot of people that were very confident that semiconductors was going to go up higher. So you would use this and ignore this bullshit here. This is bullshit, right? That's how Jeremy likes to say bullshit. Bullshit right here. This is crap. Okay, and this is real. So that's why they like to draw it this way, because then you could see, oh, this is the range. This is the actual range that I care about. And then once you saw that, you can compute how high it would go. Okay, so let's look at this one, because this is what's happening in the current day. What is happening in the current day? This is what happened at the beginning of the year. You had February down here. January. Then we have February, we have March, and we have April. So if you can use this to compute how high we go, how would you do it? Okay, I see that I have a range here. And once we break out of that range, I can tell how high we can potentially go. So this is how you would do it. You would count the columns. So you got 1 column here, 2 column there, 3 column here, 4 column. Okay, you get the idea? 1, 2, 3, 4, 5, 6, 7, 8, 9. You have 9 columns, I think. Yeah, it's 9 columns. Okay, so let's do some math. All right, I know you guys don't like math. Okay, math. You can do arithmetic, can't you? Come on, 9. All right, you have 9. Once you have 9, I take the settings of the point and figure chart, because this is what I use to have the settings. Each of these boxes represents 5 points, $5. And then I use 3 reversal. What is 3 reversal? I'm not going to get into it. This determines how you draw these things. So let's just say you know what I'm talking about, and you have 3 and you have 5. 3 times 5 is 15. Okay, we have 15 over there. 3 times 5 is 15. 15 times 9, what is that? Okay, who's good at math? Come on, I think it's 170 something, right? It's 170 something, I'm sure. I'm not good at mental math, even though I'm Asian. All right. Oh shit, I'm wrong. 135. See? See, I'm very bad at mental math. Okay, 135. All right, you got 135. Now you break out. Okay, so now we have this here. You see this? This area here, we broke out the top. This is the top, we broke out. So how high will we go? So we have 135. 135. The upper level will be set by here. So I add 135 to 365, and I add 135 to the bottom. So this is the range. And so I have my pessimistic number and my optimistic number. So I can add 175. Okay. Oh, 135. My bad. I said 175 again. See? 135. Yeah, I'm drawing it like this. All right, 135, you add to 365 and 310, and I will get my target. All right, so you can do your math right there, right? 135. Okay, so let's see. That's 445, right? And then you got 165 plus 135. Come on, you can do that math. That's like about what? What? That's like 500 or something like that, right? And then we can go and find our target. So where are we? So we got 500. Okay, and 445, somewhere around 450. So this is our target area, and we hit it. Which is really interesting because the bearish target, when we first entered the 145 area, we got into some turbulence here. So if we zoom in, this area is like a little mini range, right? And then here is more a larger range now. Now we're fighting above here. And then we could just count this 1, 2, 3, 4, 5, 6, 7 columns, whatever. I don't know how many columns this is. The longer this range goes, the higher will potentially go up. If this thing just breaks out now, it'll be very fast. We'll just get up to $600 or something, like I said, and we're just going down. You see? So I rather have it go sideways longer than just going up now, personally. But for a trader, if it goes up now, that's fine too, because then I can sell at 600. 600 will be where I would sell. So based on this, I know how to trade. So this, I can look at a short-term way. I could be like, I'm just only interested in trading this move and I get out. Okay. And a long-term guy would be like, well, I got in back here. I could count all these columns, right? I could go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, blah, blah, blah. And then this, if I counted all this, like how high would that be? Right? That, how high would that be? Would probably be around here again. So this, the people that bought here knew that it was already going to go over here 2 years ago. 2 years ago. You see? So my drawing's all messy over here, but I think you got the idea. Hopefully you got all like the idea of this shit. So what I'm saying is that like you can count from here and already know that you were going to be here 2 years later. Okay. Well, you don't know it was going to be 2 years later. It could be 3, 4 years later. But you know, if you bought here, like this is how the longer term investor thinks. They're not looking for a quick trade. They're looking for a big move, right? So they see this huge area, they know it's going to go up. And if I count all these columns and then do the multiplication and do the addition, it probably shows that I'm going to be around here, right? The short-term trader is probably only interested in going like, yeah, I got this, I can go up here, I count these columns, I'm gonna go up there, and then move on and on and on and on and on and like that way, right? So what I'm telling you is that like it doesn't matter how you look at it. It's the same thing. It's just that the trader is only looking at short-term stuff. The investor is just looking at a longer-term stuff, but the chart is still the same. The chart is still the same. I could redraw this any way I want to suit my purpose, right? I could change the settings here. Here I put 5 and 3. I could change this so that like if I'm more interested in looking for bigger moves in the longer term, I would change those settings and look at it another way. Okay. And that's something you can play around with. And if I'm more short term, then yeah, I would just be zooming in again and looking at like the 5-minute or 10-minute charts and then make X's and O's and go like, oh, I could trade 1 week to 1 month, and I use like a shorter time frame, and I'll use smaller boxes or something like that. And yeah, you get what I'm saying, right? Yeah, you get what I'm saying. Hopefully, high level. Maybe one day we can go over this in more detail. But I think Bruce, you can look up Bruce Fraser in the Wyckoff. He does the best work. So you can go on stock charts, YouTube stock charts, and then find him. Bruce Fraser. Yeah, let me find a link. Let me see. I could probably get a link for you guys. Let's see. I put this link before. Bruce Fraser. Like if I search it on YouTube, I could give you a YouTube search link. So I can go to stock charts, yeah. And if you go on the stock charts channel, I can search it from there, and then I'll give you a link, and you can find all his videos. And if you watch enough of his videos, you understand how to do this yourself, for free. You don't need to pay to take a class. That's what I did. I mean, I had a lot of time on my hands during COVID. That's what I was doing. I was like, man, I'm bored. Let's learn how to use Wyckoff and point and figures to trade it. And then I was like, yeah, this is not a bad way of learning things. Holy shoot. Right? Okay, here we go. Here's your link. Here's your link. Go here. Right here. There you go. Here, right there. You can see that, right? YouTube.com @stockchartstv/search !query Bruce Fraser BruceFrasier. Got it? There you go. If you do that, you'll find all his old videos from way back when. Just watch all the old ones. You'll learn how to do this very quickly. No problem. Yeah. Yeah. Yeah, I think we need AI to figure this out. I never figured this out myself. I think AI will be a better tool. So so going forward, I have to watch the videos that Kyle gave me. Kyle gave me some videos on Twitter. He gave me some Claude videos to look at. So I'm gonna watch those videos and try to understand how to use AI with charting and stuff, and see what other people did, and try to go from there. And after that, maybe when we get so I'm probably gonna do the Substack this weekend. We got a long weekend, so might as well do it. And what I'm gonna do is try to systematize everything. And then when we get further ahead, we'll say like, okay, we have a system here. Can we get Claude to improve the system, refine the system for us? And then from there, we'll move forward step by step by step. And who knows, one of you guys will be smart enough to go much further than I can, and take it from there. I don't want to do this after a certain point. You guys are younger. Some of you guys are younger anyway, probably smarter, and you can go from that point and take over. Yeah. So everything I do is for free. You guys can take it. Have fun. I never cared about money that much to really look at that. All right, let me see this stuff here. The other day, I was wondering what it would look like to compress the x-axis into one vertical column. Well, now you know. Now you know. This is the way they were doing it. Okay, I'm telling you, build. I recommend trade. I don't recommend trading, so I recommend getting a good job. Yeah, that should be the way you should be doing things. But let's say if you don't have a good job, let's say you want to make money fast, then I'm opening a door for you to try. But not everybody's gonna make it like this. But yeah, some of you might be very unique people, very unique people, and I'm helping you out because I'm teaching you stuff that I feel actually work. I'm saving you time. If you go around and read books and look at YouTube, you're gonna go around in circles listening to people that have systems that do not work, are not reliable, haven't been tested. They're just trying to shill you something, right? They're trying to shill you a service. They're trying to shill you a book. They're trying to shill you whatever they're trying to shill you. I make no money telling you this stuff here. So that's why, if it works or doesn't work, at least it's free. At least it was free. There you go. So there you go. Okay. All right. Okay, we're done with this. Let's go to the videos. Or one video. It's just one long ass video. Hopefully it doesn't bore you. So let's put up some music. Let's put up some music. 'Cause this is gonna be accounting. I know if anybody that hears accounting goes like, snore time, go to sleep time. Normal snore. Yeah, we're not in normal times. We're in a Trump era. Trump has given you a doorway to get rich. So he did it once in COVID. He did it twice during tariff. He's gonna do it thrice with the AI, Iran stuff. So this is gonna be an interesting. Okay, let's get the video. Let's get the video. Fuck. This guy is a very good person to follow, but if you're not interested in fundamentals or accounting, really gonna be boring for you. But he knows his shit. All right. But knowing a lot of stuff doesn't mean you can make money off of it. Okay, that's what I'm trying to tell you.
Let's start with last week's economic data. The balance of trade, it's only for March, so we're not going to have the really interesting number, April, where oil exports were increased, oil imports were decreased.
Okay, you get a feel for this guy already, this guy's content. It's going to be very boring. You can already tell it's going to be boring. He's looking at every data point. He's looking at every number, going, oh, well, what's the yields doing? What's the service PMI? Oh, what's the price? What is the JOLT opening? No. This is not going to be good for you guys, is it? This is not going to be good. You're going to be too bored. All right, so I'm going to find some timestamps. I'm going to have to find some timestamps. Let me try to find the timestamps that are interesting. Let's see. Which ones? All right, 30 minutes in. Okay, I found it. 30 minutes in. Let's go 30 minutes. I'm going to skip to here. Okay.
Lead from 5,000 all the way down
to my God, look at this.
Look at the pattern on this chart. You had, this is a 1 year. So you have 1 year where it sort of just climbs nicely and then just takes off. Kind of like this, where it climbed nicely and then just took off. And there's the takeoff. Wait till I show you more charts. They all look like that. All of them look like that. Forward, 4-quarter operating earnings, 374, up from 343. Not a couple quarters ago, we were looking at more likely sell the house that they get. So you'll also have, over that 20-year period, 2030 to 2050, the largest cohort of existing homes for sale hitting the market.
Okay, okay, look at the right part here. Look at the bottom right, the purple stuff, right? He wrote RRP. That's his handwriting. RRP. You guys know what that is? That is reverse repo. This is why I'm going to have to teach you about the Federal Reserve, how it works, because you need to know about reverse repo, and then at the bottom is repos. And you know TGA, do you know what that is? That is the Treasury General Account. You know what? Okay, what's the reserves? What's the SOFR? You guys know what the SOFR rate is? See, this is why you guys cannot be doing the thing that Eric was doing. He was trying to say like, oh man, look at the yield. Look at the 10-year, look at the 2-year yield. It's going up. That means the market should crash. Sorry. You also need to know the RRP, the repos, the TGA, the reserves, the SOFR, everything he drew here at the bottom. You need to know too. You guys don't know that stuff. And I don't know if you guys should know that stuff, honestly. Do you need to know this to determine if I want to buy Rocket Labs tomorrow? No, you don't. But if you do want to learn, okay, I will indulge and try to teach you guys that stuff, because this determines liquidity. These things you plug into an equation with the yield, and then this way you can determine if the market should go down or up. But you don't have this master equation and all this stuff. So that's what he's talking here. This is what he's talking about here.
So housing, new housing, maybe on its back for quite some time. Okay, let's look at S&P 500. All-time high, 737.62. IWM all-time high, 284.17. And Triple Q all-time high, 711.06. And I have NASDAQ here for 1998, December 31st, 1998. Started 1999 at 21.92. And to October 11th, that's 9 months, 11 days, hit 29.15. So in the first 9 months, NASDAQ was up 33%. It was incredible. What a year. But hold on. In the next 2.5 months, December 31st, it went up another 1,000 points, 4,069, another 40% on top of the 33% it already did up until October. Then it accelerated and another 40%. That was the millennium. .com everywhere, and the idea that planes would fall out of the sky, elevators would plunge, Y2K. I was in Hawaii, Waikiki Beach for that. And after the beach party, you went back to the hotel. The elevators were off because they were worried that the elevators would just plunge. So you had to take the stairs up. I was only on the 5th floor, so not a bad thing. And then the market proceeded to run another 24% all the way to March 10th. 5,048, added another 1,000 points. You get to October 11th, you've added 800 points. 2.5 months later, another 1,000 points. 2 months later, another 1,000 points. It was ridiculous. From January 1st, 1999 to March 10th, 2000, 14 months, 130%. 130%. And then over the next 2.5 years, it was a slow, long bleed from 5,000 all the way down to 1119. Look at the pattern on this chart. You had, this is a 1 year. So you have 1 year where it sort of just climbs nicely and then just takes off. Kind of like this, where it climbed nicely and then just took off. And there's the takeoff. Wait till I show you more charts. They all look like that. All of them look like that. Forward, 4-quarter operating earnings, 374, up from 343. Not a couple quarters ago, we were looking at the 200 area. Now we're in the 300s. It just keeps going in one direction. How can this be? That is an accounting glitch that is creating that. I shouldn't say an accounting glitch. It's
all right. So this is going to be the important part, all right? So watch what he says about this accounting glitch. He's going to mention this. This is going to be important for you guys to understand why the stock market is going to go higher and higher.
Glitch. It's accounting rules, but it is an illusion. Closing SPX 7,400, 21 times forward earnings. See, it's not 23. There's room to run, say the bulls. There's room to run. 1.7. 1.7 times 343, you're running another 600 points up. The index could be at 8,000 by the end of the year, 800 S&P. Come on, there's room to run. And this market doesn't like to wait. If there's room to run, let's get there now. So you could have this trajectory continue on because, of course, AI, the massive build out, the earnings are real. You have cash flow backing every dollar. That also is an illusion, and I'll explain why. It's an illusion of accounting. A little bit more implied volatility, almost nothing. Reporting 9 companies, nothing really exciting. I've been through them. Well, you know, there's a few here and there, but nothing really exciting in the S&P 500. We're all waiting till later in the month. There's only one that needs to be heard from, and that is NVIDIA. And I don't see anything that suggests to me that they're going to report that anything is slowing down. I don't see any of that stuff at all. Okay, I'm going to switch to PowerPoint here because I want to show you a bunch of charts, and I want to be able to cycle through them quickly. And let's see if we can get our ink working here. We'll use something that works on white and black. Blue is not a good color here. Oh, well, that'll do it. So this is the semiconductor index. You can see this line here, and then straight up. This is Intel. Again, you see this, and then straight up. Let's move on. AMD. You have your growth and straight up on semi. Silicon carbide here and straight up. Texas Instrument, a little rougher here, but there you are, straight up. Qualcomm, look at this, straight up the side of the chart. SanDisk, there's your growth and straight up. And here we have Micron and straight up. Look at these charts. They all look the same. Seagate, there's your growth here. And then, and the inflection, all hockey sticks. There's your growth here for Western Digital and straight up. This is NASDAQ, January 1st, 99 to December 31st, 99. And you have your 1-year chart and then straight up. Again, let me go back. Look at all these: semiconductor, Intel, AMD, on semi, Texas Instruments, Qualcomm, SanDisk.
Yeah, I would play this guy at 2x. Yeah, yeah, you could get through it at 2x. Oh man, but this is gold info. So see, I helped you out because I don't usually watch this guy's stuff all the time, but you know, a lot of his videos, they have, you know, they're timestamped, which is nice. He timestamps his videos. And he talked about AXTI, which is one of the stocks I mentioned yesterday. So I said, oh, it'll be a good time to bring up this guy's content, right? He talks about 1999.com and AXTI, which is great. Might as well talk about it in detail. So a person like this, he's not going to look at charts, right? Really. He just drawing these hockey sticks. He's like, oh yeah. The way he's going to approach the market is he looks at accounting. He just looks at everything. Yeah, YouTube actually charges for 3 or 4x. Yeah, they started charging for that. Yeah. That's insane, right? What a bunch of assholes, man. Ridiculous.
Micron, Seagate, Western Digital, NASDAQ. Same thing. And this was the end of the year. This is what we have over here. This point is here.
This is what it is. So this is the first part of the bubble. This is the first part. That's what he drew right here. Okay, he drew the top half. He goes all the way up here, and that just matches the bottom where we got to the end of like what was it? Probably December of 99, right? And then going on to the 2000s is when we got the real big finale of the bubble. So this is where we're going to end up if it's true. We could just crash and burn this October. This could be over really quickly. If this AI stuff is not real, and somebody out there shows that this is Fugazi, then we're screwed. So at the end of this stream, hopefully I can get to the token stuff, the token matching. Yeah, this is the approaching the top. Yes, we are a late stage economy right now. We are in a late stage economy. So when I showed you the REITs, the real estate sector going up, that really piqued my interest, because I was like, if people were right and they think that this semiconductor stuff is going to crash and burn this year, then how come they're buying? Who the heck is buying real estate stocks? The only reason you buy real estate stocks is that you think there's still room to run next year. You think that there's enough of a push to go up to be betting on real estate stocks. Real estate stocks do terrible in a recession. So why, if you think a bubble pops, we're going into recession, any kind of bad juju in the markets, why would you buy that? So to me, all this lines up to the fact that we're going to have a bigger bubble next year, going into next year. I thought there was still room to. It could be 2 years. I don't know. Yeah, I don't know. Could be up to 2 years. I'm just betting on 1 year from now to next year, next summer. But who knows? Maybe it's 2 years. Bubbles can last longer than anyone could imagine, right? That's why Michael Burry he bet on the bubble for the great financial crisis, but he bet like what? When did he buy in? He started shorting with puts 3 years too early, right? 3 to 4, 5 years early. He was way too early. The bubble kept going up and up and up and up and up and up. If everybody says there's a bubble, then the bubble ain't gonna happen. Ain't gonna crash. I mean, ain't gonna pop. Okay? It's only gonna pop when everybody bought in. Everybody believes that it ain't a bubble. This is real. Pets.com is a real company. It's going to make billions of dollars in revenue. When you hear people talking like that and they're getting loans and they're borrowing people's money and they're just going around gambling, that's when you know it's a bubble. When people stop saying it's a bubble, they all just bought in the belief. They all drank the Kool-Aid. When they all drank the Kool-Aid, then what's going to pop? People haven't bought the Kool-Aid yet, bro. There's still a sucker to get in here.
And then you still went further. This is an accounting phenomenon. Let me see if I can get my, where is my, I can only write in blue and I can only write thing. It has to do with the CapEx supercycle. The earnings growth accelerates later in the cycle. We had a lot of announcements of the amount of CapEx spending, so it is showing up in earnings, and if it's showing up in earnings, it's going to show up in pricing. Why does it boost earnings? Because all CapEx is revenue, but no CapEx is expense. So earnings growth late in a cycle ends up being wicked because you have CapEx. Let's just do a chart. Year over year, your CapEx gets bigger and bigger, and we are at this point now. Well, all of this is going to be revenue, but all of this shows up as an asset on a balance sheet. So it's not an expense in the year in which it is incurred. So you have all of this showing up in earnings, but none of this showing up in expense. So earnings look incredible because you have all the revenue associated with the CapEx, but none of the expense yet. But when that CapEx levels off or even decreases as time goes on, the expenses continue to increase year after year. So you get earnings compression and earnings dropping each year. You're front-end loading all of the earnings at the beginning of the CapEx cycle and then apportioning all that CapEx to certain years, all the while that you're building capacity. So,
okay, let me try to reframe this in layman terms, okay? So apparently, when you spend money to build, like let's say I have a factory, I'm spending money to buy more equipment for my factory. The year that I buy that equipment, it's turned into revenue apparently in accounting rules. So I'm not a CPA. I'm not a CF. I didn't take no CFA either. I'm not an MBA. I don't know jack crap about accounting. But the way they interpret the numbers when they look at the the SEC forms, the Q whatever forms, when they look at it and they read your company and they interpret what they see in the company, it's like, oh, you spend a lot of money? Well, that counts as revenue. So then your revenue goes up and up and up and up and up, even though all you're doing is spending more money. And so they think, oh man, this company is great. But what's really happening is that you're spending so much now that in the later years, it gets turned into expense. Okay, that's basically what he's going to say.
capacity each year is starting to increase as well. And our spotlight story this week is AXTI, and we're going to see here as well, capacity is coming online. Capacity for memory coming online. Capacity for data centers coming online. The amount of companies moving into the data center space, optical cables, the amount of companies that are now supplying that or stating that they're going to supply that. Corning getting involved now as well. The amount of capacity that comes online. So you have this capacity build funded by this CapEx build, which supports your earnings build, but no expenses just yet. All these expenses follow through in the following years. But once you have your capacity, prices then start to drop because now you have more capacity. As soon as you get a little drop in demand, you then have impairments followed by impairments, and that is why NASDAQ after did all of this, because all of those impairments showed up, and then all the accounting irregularities from this period started to surface, the most egregious ones being companies like Enron, WorldCom. So this, all CapEx super cycles end the same way. All CapEx super cycles look the same way because all of this, back then, all of this represented all of the CapEx spending, all of the CapEx revenue, and all the CapEx earnings with none of the CapEx expenses yet. Those didn't come till later on. Okay, one more thing to point out.
Ah! Oh my God! What is this? What is this? Is this on the test? Oh, I don't want to read all. Oh my. Okay. Forget this. All right, let's skip ahead. We're gonna go to AXTI. I'm not gonna do this. Okay, I don't want to read all these acronyms.
This economy has exploded over
Oh my God.
compound
All right,
substrate.
Here we are. Okay, we're gonna talk about AXTI, the chart I showed you earlier, right? So why did I show you that company in particular the past 2 days? Not because I wanted you guys to trade it, okay? You can if you want, but I'm just showing you that that company is probably the example of other companies later, like, you know, all the IPOs we're going to have, and who knows what other software companies might come around and try to bite off of Claude and ChatGPT and Grok. There's going to be more companies that have this super straight line going up, going to the moon. Okay.
Have deferred revenue as well. Well, when they get deferred revenue, they get cash. If you go to their CFO statement, you see that they add that to cash flow. And if you remove it from their cash flow numbers, you get obviously much lower cash flows. CoreWeave for all of last year, if you remove just the deferred revenue that they added back, they had negative cash flow last year.
So I guess that's why CoreWeave is doing the worst out of all of them, right? HUT is doing better than CoreWeave. APLD is doing better than CoreWeave. You see, so this is all accounting stuff. I don't know this stuff. You think I have time to go through all these SEC forums? No. Maybe I can make AI look at it for me. Maybe. But I think this is like a waste of time. I could just look at a chart. The market will tell me if CoreWeave is good, right? You look at a chart, CoreWeave looks like trash. Why do I buy Core? I don't even talk about CoreWeave anymore, right? Everything I told you was focused on HUT, APLD, NBIS, right? IREN. I don't even talk about CoreWeave. I just looked at a chart and I realized the market doesn't like CoreWeave. Must be a reason why it doesn't like CoreWeave. Somebody like this guy probably looked at it and said, like, this company is garbage because blah, 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 some accounting thing. I'm not going to learn accounting to trade stocks, bro. So
here, the only reason they had positive cash flow was getting paid in advance for services they still had to deliver. That's a Ponzi scheme. Our spotlight company this week, AXT.
Oh man, CoreWeave is a Ponzi scheme. Oh man, short it. I don't know. You guys can try to short it if you want, but there you go. He also has. If you will go to his YouTube channel, you'll find. Go into the description. If you're on YouTube, you can find the description. There's the link to this video here, and you can go and find his channel. and he goes into deep analysis about MicroStrategies, and he says MicroStrategies is a Ponzi scheme as well. Check app last couple of days, ugliest looking chart I've seen. Yeah, I don't know. Maybe app loving is garbage. Well, what can we do? How can you tell the difference between CoreWeave being an array? Because yeah, we'll have to get into that. Yeah. It's just the eye, man, the pattern. You just look at the pattern. Anyway, AXTI. This is gonna be important. I'm just gonna play maybe 5 minutes of this, and then we're gonna move on to tokens.
This has been a favorite one of mine for playing volatility. Not really that concerned, or have not been that concerned with what they do. They produce a compound substrate that is critical in the AI infrastructure play. Critical for optical cables. We'll get into more of the science and physics of compound substrates shortly. Year ago, $1.35, finished on Friday at 114.25. That's an 85x in 1 year. It's not really, I mean, they didn't really start hitting momentum till back here. But if we were screening for momentum on a daily basis, we would have found them back here, and then here, and then here, and then here, and then here. It would have been a long ways away from 114 when we first found them. And man, did they go, but with a lot of volatility, 146%. They were higher, 180, 190, big premiums. Hard to lose money when you have that much volatility. Even now, 40-day at the money straddle is 45.35. It's 40% of the price. Just finished a capital raise, 632 million. It is specifically for indium phosphide expansion, and their expansion plans are aggressive. 2x this year, followed by 2x next year, and maybe another 2x the year after, doubling, which would bring their sales into record territories. But is the price justified? It seems like $1.35 to 115. Is it not all priced in? They're roughly about a $5.5 billion market cap. I think they have 63 million shares outstanding as of the end of March 31st. And at 114, maybe they're more around 6.5 billion. So we have to look at it as a multiple of sales, and you have to sort of start thinking about forward sales. And when you have capacity ramping up very quickly, it's a matter of, well, which year do you choose to make the multiple on? Because that growth.
Yeah, this is a very old company. Man. It's in Fremont in the Bay Area. Yeah, I probably drove by this company many times. Probably just like a nondescript little office, in the middle of nowhere, right? In a little industrial office park. So by the bay. And the only reason it's getting so popular is because of AI. Everybody wants AI. Everybody needs optical cables now. Everybody needs lasers now. And so this niche company, right? This company is making something very niche. Indium phosphide, gallium arsenide semiconductors. You guys only know about silicon. That's the only thing you guys know about. Okay, what chips do NVIDIA use? On what type of technology do we use? Silicon. How about Texas Instruments? Texas Instruments has some analog devices. Some analog devices use gallium arsenide. Now, for high speed or high powered, stuff, equipment, high voltage or special industrial stuff, not very popular. Those things doesn't make the big bucks. But now all of a sudden, everybody needs lasers. Everybody needs advanced optics. Everybody needs this. But so how do we get the high speed? You want to have like Cat 10 Ethernet cables. We're not talking about like Cat 4, okay? We're not talking about your like stupid little dinky Cat 4s in your home, Cat 5s in your home, right? Cat 3, Cat 4, Cat 5 cables. No, we're talking about high speed cables, very high speed. You think that 4K porno is going to just ship it out on some normal cable wire? Nope. Sorry, my friend. We're going to need some special stuff for this. If you want that 4K AI porn, we're going to need some indium phosphate. Last time I heard about indium phosphate was in school, bro. Doing some quantum mechanics. I never touched this stuff when I went to work, but because of all you guys gooning, now we got to go and get some exotic semiconductor material here. Great. And that's why this company went from $2 to $150 now. What the heck is this? Yeah, so there you go. Move sideways for damn near 20 years. And now it's the hottest stock of all time. Because of goons.
Growth rate will
Goons
be
like
priced
you.
in. No matter which year you choose, they're priced. They're not cheap, but their growth is real, their demand is real, and the space they're in is a difficult space to add capacity quickly. They're a material science company. They're based in California. All their production's in China. They produce compound and single element semiconductor wafer substrates, the compound gallium arsenide. The focus is indium phosphate. All manufacturing in China, Tongmei. They have 3 facilities there, and they're expanding that. So the CapEx is for brownfield expansion. Tongmei is going through an IPO process in China, so it will be listed in China. It is an owned subsidiary of AXT. February 4th, 2025, INP, indium phosphate, was added to China's export control list. So there are export certificates you need to get this stuff out of China. Within China, you're good. Whatever it produces, it can sell within China. And we're going to see that based on its sales. Asia is the biggest part of its sales right now. Europe is a smaller part. North America is almost non-existent. They do have an application for export certificates to the U.S. that are, air quotes here, under review. They didn't give too much guidance on that. Even in guiding for their revenue, they said their guidance included, I'll use their word, some upside based on export permissions. So they're not really looking at the U.S. In their Q2 guidance as being anything significant for their sales, just some upside if that happens. I have their financial statements, just their income statement 23, 24, 25 up on the screen. One thing that will jump out at you if we look at their net loss, let's see if I can find something that writes on this, 19 million in 2023, another 11.8 million in 2024, 23.2 million in 2025, and these are millions. So the revenue here was, for the full year, 76 million. A little under 100 million here, drops down to 88 million here. They're blaming the export permits because this was February 4th that indium phosphate was added to the export list, so they had to get export certificates, and the drop in revenue of 11 million was blamed on the slow pace of getting those. So as of the end of 2025, December 31st, when you're looking at these numbers, you're not that impressed overall with the pace of losses. This is the 3 months ended March 31st over here. 26.9 million in revenue. That's 108 million annualized run rate, and gross margins at 29.63, the highest it's been in quite some time. And that is, as they say, volume and mix. More indium phosphate, higher volumes, and a greater percentage of their sales coming from that, which have higher margins. Usually for indium phosphate or for compound substrates, usually you're somewhere between 20 and 40% across the industry. So 30 is right in the middle of that, and they are guiding to higher gross margins. But still, you're at a run rate of 100 million a year. If you think about a $6.5 billion valuation, 65 times forward sales, but that would be forward sales with no growth. They are forecasting significant growth in revenue. Loss from operations, negative 28% is the margin based on revenue, negative 15%, negative 25%, but now only negative 5%. And they are guiding in Q2 to profitability. So that explains a big part of their run-up after earnings. They just accelerated. And they got all the way up to $130 that morning. Almost. I had a sale in for some shares at 129.83. Did not get it. But I was going to do some gamma scalping at that level because I have calls against my long positions. And I thought, okay, this is ridiculous now. This is some short covering going on in the morning. I'm going to take it. And I didn't get it. I did get some that I didn't recover. But they'll be called away from me this Friday. But I've gone ahead and sold $100 puts against this. When you have the story, I'll tell you the story for indium phosphate and where they sit and why it has all the right buzzwords. And as long as this volatility hangs around, you got to jump in on this. It will end badly. Much as this whole AI trade will end badly, it will end with overcapacity, prices plunging, stock prices dropping, and impairments everywhere. That's just the nature of it. That's the nature of the way the accounting works and what happens when you have that much capacity coming online. Everybody's building capacity for this right now. And I want to put one thought in your head. Right now, the AI frontier models are having a hard time keeping up with the demand. Well, what happens when the free side disappears? What happens to demand then? How many people are actually willing to pay? Let's think about that, because right now these companies are bleeding cash. They can't keep up with the pace.
All right, that's a good segue right there. That's a good segue because, yes, these companies are subsidizing your accounts right now. So I have free accounts, right, in Grok and ChatGPT and whatever, Gemini, but if you want the good stuff, you gotta pay. You gotta pay. But even people paying into the to get a subscription, it doesn't even cover the massive costs that are happening here. So we're already seeing like signs of this. People have already pointed out that like the Anthropic can't even run the old models. So every time they make a new version of Claude, they have to shut down an old version. So a lot of the oldest versions of Claude have been shut down. They don't want to waste electricity, water, and whatever running that stuff. It costs too much. Microsoft, I think, recently said they don't want to pay for Claude. It's too expensive for them. Even they're like, nah, I don't think it's worth paying for Anthropic's Claude. So who's actually willing to pay the actual price it costs to have some stupid machine think for you? Who's willing to really pay? Once you take away the free, okay, and then you go to freemium, and then there's no more freemium, and then now you're gonna have to pay for even the basic stuff. Like, who's gonna continue on and pay, and use AI, right? Let's see who's willing to do this. Unless you're gonna tell me the UN is gonna declare that AI is a human right, like humans have to have AI, right? It's just like having cell phones, right? Cell phones is a human right now. Every bum in California has a cell phone, or 3 or 4. So what's gonna happen? This is an interesting point. So we'll get to the token stuff. So I'll play a little bit more, and then we're gonna get to token stuff because I think you're gonna see that this is all fake.
Of capex and how much energy they actually need, and all of these prices are elevated right now. So they're getting the lowest. Or should I say, the CapEx is spending the most per megawatt of compute right now than they will ever spend going forward 2-3 years. It'll be much, much cheaper. That's an impairment charge. So if you get any pullback in demand, and that would come not from the general marketplace saying, I don't like this anymore. It would come from it being like, whoa, you know, I mean, when it was this price, that was fine, but now it's that price. You are hearing some stories now of some enterprise customers going, are being moved from flat fees to token count, and their costs are increasing a factor of 10x in a month. 10x. So it's not a matter of we're spending, you know, $200 a month. We're now spending $2,000 a month on this stuff. Then you start really evaluating, is it, well, you know, for 24 grand a year, it better be doing something. I am with 4 models. I'm at, I think, 10,000, 11,000 a year. I get value out of it. If it went collectively to 30, I'd probably keep paying, but I'd probably drop off 1 or 2 of the models to keep my costs under 20. So once they start charging for these things, demand will drop. And if demand drops, it's like, whew, great, we don't need all that CapEx anymore, and now we have increased revenues. Think about what happens to the long tail of AI infrastructure at that point, and AXT would suffer from that. The longer back you go in the supply chain, the bigger the bullwhip effect. You get a 10% drop at the front end, could mean up to 50% drop in orders way at the back end of the chain. These guys are way at the back end. So be careful with this stuff. Okay, I'm going to take you through a small tour of substrates so that you can understand what a compound substrate is, what it's doing, why we have different ones. The document that I wrote up.
All right, it looks like I'm back in school again, in college. Oh, time to learn semiconductors 101.
Compared Indian.
You guys want me to explain this for you? Do you know where your chips are made, how your chips are made? Do we want to go back to the beginning of time? This is semiconductors 101 right here. Here we go. No, I'm not going to do this. All right, we're going to go to tokens. Okay, that's a good segue. He mentioned tokens. This is exactly what this stream was supposed to be about. Tokens. What are tokens? Not token blacks, not token like freaking Asians. I'm not talking about that shit. All right, I'm talking about real tokens here. Well, not real tokens, fake tokens. Maybe they're more fake than you could possibly believe. And then we could get out. So, all right, let me see. Let's play this.
A billion tokens?
I'm sorry, I'll dial it down.
No, you need to spend more tokens than that.
You want me to spend more?
How many tokens are you spending? Tell her.
20 billion
20 billion tokens? What are you spending
Per
that on?
month.
My AI agents make poetry.
Tell her how many tokens you're spending.
140 billion.
What? What are you even doing with
Per
all those
month.
tokens? I've heard it.
Motivational AI agent.
You're having your agent motivate you?
Other agents.
Motivating other agents.
Why are we
of
spending money
companies.
motivating other people's agents?
The new alpha is companies that spend money on tokens. I'm putting you on a tip. A token improvement plan.
Okay, that is not a thing.
If we don't find a way to spend 1 trillion tokens,
Okay, we can't
We have
spend
failed.
1 trillion tokens.
We have failed.
We're gonna run into quota limits.
This is not a, this might be a joke, but this is exactly what happens in a software company in San Francisco. You can go to San Francisco, see if they let you into the Uber headquarters or the Cloudflare headquarters or whatever, Pinterest. Go to one of those stupid little companies, huh? And then you can go into a little meeting room like this, and you'll hear this type of shit. This is exactly what they talk about all day. This is work for them. This is work. This is actual work. So let me play that again. Fire them all for making. This is the reality now. We're in the token world. So did you guys think like the Bitcoin stuff was done on accident? Like the concepts that were driven by Bitcoin, cryptocurrencies, building out a lot of infrastructure to mine for Bitcoin, right? They call that work. Like your GPU, your ASICs. ASICs is application specific integrated circuit. So that's what ASIC means. All those things were made to do fake work, right? You were mining a Bitcoin. What the hell is mining a Bitcoin? You were digging in the ground? No, you were wasting electricity and water to create a token. A token. And so these concepts are now in AI. So I think, Bitcoin kind of was like a test run for the AI infrastructure. They were trying out like, okay, how do we figure out how do we get people to work and code for us and be monkeys for us to make the new world order, or the new world order, I mean. And this is how they do it.
1 billion tokens?
I'm sorry, I'll dial it down.
No, you need to spend more tokens than that.
You want me to spend more?
How many tokens are you spending? Tell her.
20 billion.
20 billion tokens? What are you spending
Per
that on?
month.
My AI agents make poetry.
Tell her how many tokens.
So let's go and revisit what this means. Okay, you heard that. Everything is about the token-based economy now. This is the token-based economy. Okay, so let's continue, and then we'll be done for the day. Hopefully that'll be enough for you guys. Okay, in summary, let's look at the space stocks. Okay, so DXYZ. We got some SpaceX already built into this ETF. I guess if you want to gamble, this is what it was doing in 1 week. We were up 40%. We have some leverage. ASTS is the top performer over the week, 58%. So again, all these space stocks are going to be hot. So let's see. Planet Labs will have earnings maybe in June, right? June, yeah. So everything else is pretty much done with earnings. Or yeah, Fly is done. Iridium, yeah, is done. Okay, so yeah, I'll probably try to look and see which one of these look the best for us, because I've only been focused on Rocket Labs. I haven't really spent the time to be looking at all these other charts. Rocket Labs is my favorite, and I know like ASTS, LUNR, but like I haven't really looked too much into the Iridium, Fly. What else was good here? Yeah, VSAT's at the bottom. No, never mind. So yeah, the Voyager Technologies, Voyager. Okay, that looks okay. Momentous looks like it's starting to move up. So that's just at the beginning. So we'll see. I'll have to look at all this stuff. So it kind of goes into your like question back up here. You're like, what? How do we know it's in a range or it's going to break out? And yeah, see, either you can recognize it in a predictable manner that gives you high probability outcomes, and I guess the only way I can figure this out is once we start drawing and writing down like what are the qualities that I want to see in a chart. Okay, I want to train the AI to figure that out for me. I don't think we should let humans do that anymore. We want no biases. We want the AI to really do this because they're designed to look at patterns. So why not let it do it? So I think that's the first step. The first goal is we write down everything that we want to see in a chart, right? On an uptrend, on a range, and then quantify it based on that and say like, yo, if you see this pattern, what's the odds of it breaking out versus breaking down? Give me that, right? Should I short it or should I long it? And I think we can do this. And that's what I want to eventually get towards. At least we're trying to get towards that. Maybe at the beginning. I'm not saying like we're going to complete it, right? I'll start it up and maybe one of you smart asses will probably figure it out how to do it and finish it out. All right, let's look at tokens. Let's look at these stupid little tokens. What the hell does that mean? Ugh, what is this crap? All right. Language of currency of AI. All right, and currency of AI. See, so they already talking like it's a cryptocurrency, huh? Oh, fuck. Tokens are units of data processed by AI models during training and inference, enabling prediction, generation, and reasoning. So how did we get from here into like employees running around trying to generate tokens? Under the hood of every AI application are algorithms that churn through data in their own language, one based on a vocabulary of tokens. Tokens are tiny units of data that come from breaking down bigger chunks of information. AI models process tokens to learn the relationships between them and unlock capabilities, including prediction, generation, and reasoning. The faster tokens can be processed, the faster models can learn and respond. AI factories, a new class of data centers designed to accelerate AI workloads, efficiently crunch through tokens, converting them from the language of AI to the currency of AI, which is intelligence. With AI factories, enterprises can take advantage of the latest full-stack computing solutions to process more tokens at lower computational cost, creating additional value for customers. In one case, integrating software optimizations and adopting the latest generation NVIDIA GPUs reduce costs per token by 20x compared to unoptimized processes on previous generation GPUs, delivering 25x more revenue in just 4 weeks. So it looks like NVIDIA just created all this stuff so that people could figure out how to quantify the work that's being done by their GPUs. Man, I don't want to read the rest of this, do I? All right, whatever. Let me read this. Whether a transformer AI model is processing text, images, audio clips, videos, or other modality, it will translate the data into tokens. This process is known as tokenization. Efficient tokenization helps reduce the amount of computing power required for training and inference. There are numerous tokenization methods. The tokenizers tailored for specific data types and use cases can require a smaller vocabulary, meaning there are fewer tokens to process. For large language models, LLMs, short words may be represented by a single token, while longer words may be split into 2 or more tokens. The word darkness, for example, would be split into 2 tokens, dark and ness, with each token bearing a numerical representation such as 217 and 655. The opposite word, brightness, would similarly be split. What the fuck? Oh, this is ridiculous. Okay, bright and ness, and corresponding numerical representations 491 and 655. In this example, the shared numerical value associated with ness can help the AI model understand that the words may have something in common. Are you serious? So you need to turn it into a token for that AI to recognize that ness is the same as ness? Wow. Man, no wonder you need a lot of water and electricity. This is not how our brains work, you know. Your brain is probably like, what, 100 times more efficient than AI? Like, how much water do you drink and how many calories do you consume for you to recognize that ness is the same as ness and that brightness is close to darkness? Like, what? This is incredible. Wow. Oh my god, this is so long, dude. This is so long. I'm not gonna read all of this. Okay, anyway, I think we got some kind of idea of what it is. Okay, this is more important. Is the cult of token maxing just another fad or the new normal? So here's what's happening now. Meta made headlines last week after the information revealed. All right, let me zoom in. Okay, let me zoom in here. Revealed that an employee created an internal leaderboard to track employees' AI token consumption. The leaderboard, known internally as Claudenomics, is part of a new controversial trend in the tech industry referred to as token maxing. Token maxing, guys. Forget about looks maxing. We're token maxing here. Token maxing is about encouraging engineers to consume as many AI tokens as possible. Supporters argue that token consumption is a key indicator for measuring employee and developer productivity. There's a growing attitude that teams that aren't burning enough tokens simply aren't automating enough and get left behind. However, others in the tech industry criticize token consumption as a vanity metric, as it doesn't directly measure productivity or innovation. It can also be extremely costly if it fails to deliver real-world value. For instance, out of Meta's top 250 power users, the highest-ranking user averaged 281 million tokens in just 30 days, an amount that would have cost millions of dollars. the cult of token maxing. While the Meta employee has since taken down the leaderboard, developers are under pressure to increase token consumption across the industry. In March, the New York Times reported that an engineer at OpenAI processed 210 billion tokens in a week, enough text to fill Wikipedia 33 times over. The article also found that one user at Anthropic ran up a $150,000 Claude code bill in a single month. Even Jensen Huang, founder of and CEO of NVIDIA, said on the All In podcast that he'd be deeply alarmed if a $500,000 engineer didn't consume at least $250,000 worth of tokens. Dude, this is Chuck E. Cheese, man. Oh, yes, yes. If you are a $500,000 code engineer, okay, a code monkey, and you don't consume $250,000 in tokens, you're fired, bitch. You're fired. You're fired. The reality is that there is an expectation emerging in the tech industry that developers and employees should be making use of as many tokens as possible. The recent trend of token maxing reflects a desire to incentivize AI usage within organizations and presents the assumption that tokens are the base unit for AI usage, i.e., greater consumption indicates higher value of AI. Jim Rowan, principal U.S. head of AI at Deloitte Consulting LLP, told me via written commentary, while it's a well-intentioned perspective, there are risks of turning tokens into a vanity metric. For many organizations, this metric of consumption does not distinguish between AI usage and the actual value derived from AI. Okay, token maxing in action at Clio. What the hell is Clio? Okay, although critics point out the risks of needless token consumption, many companies are going all in on token maxing, particularly AI-first companies. One such company is Clio, a financial assistant app founded in 2016, which is currently valued at $1 billion. Is this an IPO? Is this an IPO that's going to happen? Should I go all in on Clio? I go all in on Clio, right? If I buy Clio, it's going to be 1,000% higher the next year, right? In April 1st, in April, I had a video call with Barney Hussein Yao. What the hell name is this? Barney Hussein Yao, founder and CEO of Clio, who expressed his belief that token maxing was an essential productivity metric. Everyone at Clio is token maxing. Everyone at Clio is building software internally. Husayao notes that Clio has changed rapidly thanks to the advancements in 4.5 Opus and the Claude code CLI. Today, employees are allowed to spend up to $1,000 per month on tokens if they are non-engineers. This increases to $2,000 a month if they're an engineer. During the call, he said that Clio has an all-hands meeting coming up in which he will be encouraging employees to token max. He also claims to have spent 27,000 pounds, over 36,000 US dollars on tokens this month by having multiple agents running in the background during and outside work hours. You're either AI native or you're irrelevant, Husayao said. Anyone that is not using Claude code and genuinely using it to improve their productivity, the way they work, how they interact with everyone else, they're just not gonna make it. You kind of see the productivity levels. We've got 178 engineers, and you can quite easily see now the productivity levels are really rising with like a big cohort. And then there's a cohort of laggards, and they're the ones still like handcrafting code. So the output and productivity of native to laggard is gonna really accelerate. Oh man, this is insane. Wow. Anyway, I'm not gonna read the rest of that. I think you got the idea, guys. I think you got the idea. Yeah, they're like credits, huh? Yeah, credits. They need people using credits so they have business. Yep. I think you can kind of see the bubble. The bubble here. This is a bubble, baby. This is a good bubble, though. I'm liking this. I think we can make a lot of money into next year, guys. Yes. This is exactly like that. NFTs, all that, same thing. A lot of the crypto lingo has crept into this AI stuff. So, yep, all the concepts they were testing out with crypto, I think it's appearing right now as you see it. So you can pay a subscription to use AI services currently Hopefully we can open source. The problem with the open source is that you don't have the hardware though. The software might be open source, right? But you don't have like a gajillion GPUs to run it. Like you can run it locally, and your little dinky desktop probably will take like 100,000 hours to do something that they can do in one millisecond, right? So if I want to make an AI video, guess what? If I do have to do how many frames per second at 4K resolution, how long will it take to generate my movie, right? If I don't use their services, we don't have the infrastructure. That's how they get you, because you know, you can use the Chinese open source models, you can use other people's open source models, but if you don't have the GPUs, you don't have the ASICs, you don't have the resources, the water, the electricity, you ain't gonna be able to do it in time. You'll probably take that like so much longer to do work compared to these freaks over here in Silicon Valley. It's like you have like a dirty nuke, and these guys have like hydrogen bombs and ICBMs. You can't compete. The real war is going to be the AI war. That's what everybody's aiming for. Which country can make the best AI to defeat the other guy? That's it. It's crazy. It's going to be crazy. This is wild shit, man. We're living in interesting times. Interesting times. So yeah, we're going to be eating good if the stock market really helps us. Okay, I'm going to play this propaganda video from NVIDIA. Okay, that's what I'm going to be doing here. And we'll end the stream on token. In token stuff here. Here's your propaganda video from NVIDIA. And we'll call it a weekend, right, guys? So I'll probably try to pop up sometime down the line in the weekend, hopefully. I'll have some free time in the 3-day weekend. Let's see, start the Substack finally, and then I'll list out like some white paper. I'll be like, this is my plan, and then maybe I'll talk about the Fed some more. Try to introduce you guys to more concepts in some presentation.
This is how intelligence is made. A new kind of factory. Generator of tokens. The building blocks of AI. Tokens have opened a new frontier, the first step into an extraordinary world, where endless possibilities are born. Tokens transform words into knowledge and breathe life into images. They turn ideas into videos and help us safely navigate any environment. Tokens teach robots to move like the masters. Inspire new ways to celebrate our victories.
A martini, please.
Call him right up.
Thank you, Adam.
And give us peace of mind when we need it most.
Hi, Maroka. Hi, Anna. It's good to see you again.
Hi, Emma. We're gonna take your blood sample today, okay?
Don't worry. I'm gonna be here the whole time.
They bring meaning to numbers to help us better understand the world around us. Predict the dangers that surround us. And find cures for the threats within us. Tokens can bring our visions to life. And restore what we've lost.
Zachary, I got my voice back, buddy.
They help us move forward, one small step at a time. And one giant leap together. And here is where it all begins.
What the hell? Is this for real, dude? I'm living in a simulation, man. This is a joke universe. This universe is a comedy, bro. This is laughable, man. I live in a joke. That whole shit was DEI, man. Oh my god, the DEI tokens. Oh, get tokens, match the voice. Black guy. Oh man. Hey, I bet you if we had to, bro, like there's gonna be some token racism gonna come out. It takes less tokens to make a black guy than a white guy. Guess what? There's gonna be hell to pay, bro. There's gonna be hell to pay. I could imagine the fun people are gonna have with this. Oh yes. Yeah, we could try to do that. We could try to pull our own resources. I don't know, man. Shit. We're so behind though. You know, I think the elites have already pulled off the coup, you know. With COVID, it was just like, dude, you guys are morons. COVID was such a litmus test to me. It's like if people fell for COVID, it was over. You can't defeat them. Yeah, it's pointless. Yeah, tropes, you're right. No, this is how I think too. They're trying to manufacture a need for their tech by incentivizing a new system to build their tech. And you have the slaves like running around because they're still slaves. Yeah, they make $500,000. So what? Yeah, I made $200K, $250K, but I'm still a slave. Didn't mean jack shit. You get money, but you're still a slave because you're helping them build the pyramid, right? You're helping them build the pyramid, man. That's all you're doing. You're building the pyramid to create the fake god, the false god, and it's kind of come here and bite us in the ass. And it'll just be funny to me. I'll just be like, oh shit, damn. See? You create a portal into Satan. And then now it's like he's coming down and whooping your ass. And it's just like, oh, well, there you go. Yeah. It's crazy shit for sure. It's just wild. This stuff is too wild for me, man. I don't think it's a parody. I think they were legitimate serious about this. But it's a joke anyway to me, right? So here's Nvidia's headquarters. You can blow up their building if you want. If there's gonna be a Unabomber type guy coming out, I think it's gonna come out pretty soon. There's gonna be a Unabomber. There's gonna be a false flag. They're gonna start attacking data centers and tech company HQ, and it'll be wild. It'll be a wild time. Get ready. Get ready. I think no civilization can function without slaves. Yep, that's right. Once they figure out how to stop being hunter gatherers, you got it. It's just the way it's supposed to be. Okay, guys. I'll see ya. I don't know what's going on. Is anything going on? I think the Boyd has been boring still. I saw Ruby try to make fun of everything. That was kind of funny today. I have no idea what the Thorps like. Oh, no idea. What is that? Grace got stomach flu, diarrhea again. Whatever. Who cares? Jeremy's trying to fish. Who cares? Skynet needs you to. Yeah. Skynet needs you to build it. Yes. It's a self-enforcing ecosystem. The Skynet is coming. Yeah, Queen Nassim was just the beginning. That's right. Queen Nassim was just the beginning. Yep. That's what happens, guys. All right. I'll see you. Have a good weekend. If I don't see you over the weekend, I'll probably pop in. If I do, like some random time and Sunday or something. Probably, I'll be like, oh, okay, let's do a stream. Let's talk about the Fed shit. Okay.